Good morning, everybody. Obviously, if you have any questions, you can drop them in the comment section or in the chat, and I will answer them as soon as I am done with this little bit here. As of right now, this morning, Bitcoin has taken out the weekly low. We had a nice weekly push this week, and it has rejected all the way back down and made a fresh weekly low. This is that weekly candle right here. You can see the high of this weekly candle comes in at 73,624. That is not an all-time high. The all-time high is 73,835. Now, this is the Coinbase exchange, so it is possible that Bitcoin did make fresh all-time highs on other exchanges. But as far as on the Coinbase exchange, it did not. Is this considered a double top? It is, but as a double top formation, if you just use the candlestick bodies on a weekly chart, your neckline on that pattern is going to be all the way down to $54,813. So even if you do want to take a short calling this a double top, you're not going to get a measured move or anything. You're not even going to know if it is even a double top all the way down until then. So we're going to discuss in today's video why we need to potentially be looking for pullback longs. Now, there is a lot of volatility coming up in this week. We have the election. Thank goodness. I can't wait for it to be over so all the commercials will stop. But that'll be on Tuesday night. And then Thursday, we have the FOMC, which they are expected to cut another 25 basis points. That is the expectations. Last time I looked, it was a 98% chance that they're going to cut. Now, with that being said, there are a lot of questions out there about, are we seeing potential inflation risk, or are we seeing potential recession risk? We're going to discuss all of that. So let's go ahead and get Bitcoin's analysis out of the way. Obviously, Bitcoin is still very bullish. Bitcoin is still structured very, very bullish. When you get a far distance away from your 21 exponential moving average, which you were at this point, your exponential moving average is clocking in around $63,200. When you were up here, that's a $10,000 move away from the exponential. And we do know that prices tend to retreat back to the mean. If you are using the 21 exponential as a mean, then this is still just considered a standard pullback. You are in a long-term range because the dollar is in a long-term range. Bitcoin needs to be stronger than the dollar in order for Bitcoin to break out. And as you well know, the dollar has been very strong for the last 4 weeks. Well, not very strong. It was very strong on the first week, and then it kind of slacked off. But it is still nonetheless moving higher. And there is a trade idea there, and we will discuss that as well. But all right, anyways, back to Bitcoin. You can see I have multiple trend lines here. I got a trend line coming up from down here. I mean, there's trend lines everywhere. There's lines everywhere. The chart is extremely dirty. Multiple areas of potential resistance. The all-time high, April 24 close, monthly resistance. The high month close is monthly resistance. High month close comes in at 71,288. So we got up above the high month close and then rejected the last, 4 or 5 days of the monthly candle. And this still looks good. I mean, this is a big breakout candle. You tested monthly support down here beautifully. Boom, up you go. I mean, this is what you want to see, but until you get either a higher monthly close or a lower monthly close, you are still in a range, as this candle right here would be simply looked at as a bear trap, because you did get a lower monthly close and you did put in this swing low down here, but price rejected from there and went straight up in the next 2 months. So this would be considered kind of a monthly trap. I don't look for monthly traps. I generally look for daily or potentially weekly traps. Weekly is as high as I go when looking for traps. Because to me, like, it's just, a monthly trap could just simply be a range-bound market. And that's exactly what we got going on here. You're range-bound, and that's it. You're above the 21 on the monthly, on the weekly, on the daily. You did get back under. Oh, not yet. My bad. I was looking at the S&Ps. We did get back under and close the daily under the 21 on the S&Ps. But on Bitcoin, you're retesting the month this right now. And like I said, you just now, right at the time of turning the stream on, made a fresh weekly low. And that appears where Bitcoin is kind of finding a little bit of support. We won't know if this will be support until time goes on. But as of right now, that's a pretty good area to look for bullish entries. This is the highest trend line This is the line trend line. So if you're looking at a line chart, this would be your trend line. If you're looking at candlesticks and you put the wicks as the highs, this is going to be your trend line. And you can see that upper wick trend line did come in there right around the same area as a fresh weekly low and the 21 exponential. So we'll see how that today closes. Obviously, I want to see this close above on a weekly basis, but we're not even close to the weekly 21. When we start closing dailies under the 21 and back under the 50 on the RSI, then we can start to look for intraday scalp shorts. But generally, my bias is going to be bullish as long as you are closing weeklies above the 21 weekly exponential. All right. So with that being said, is the market bearish? No, this market is not bearish. This market is still structured bullish. All of your EMAs are structured bullish. The only bearish thing you could say is your 200 simple isn't below your 200 exponential, and it should be. But I mean, the 200 simple has been stuck pretty much between 62 and 63 or $64,000 for a long time. We will look at inflationary markets, and we will look at potential defensive stances, and we'll look at growth to see if we are in a bear market or to see if we should start looking for a double top and start to short the market. Last week in my Saturday upload, I basically said, if we don't break out this week and start to get some bullish continuation, I'm going to start looking for a short. And then 2 days later, we broke out. That's what I wanted to see. However, I wanted to see bullish continuation. We didn't get bullish continuation, which is fine. Doesn't mean that it's a double top. It just means that the market wanted to pull back a little bit before potentially breaking out. But we don't know if it is going to break out because we can't see into the future. But we will play it as if it is going to potentially break out, as long as the election news is what the market wants to hear, and as long as the Fed does what the market wants to hear. I think the market's going to resolve higher. So let's go look at the RSI, because that is very important on Bitcoin and on most assets. You can see you did lose your 60 again, which isn't really great news, because that was the signal that I was using when I put out last week's video, that if this thing doesn't get back above it and start to show me something, then I will get bearish. Being back under it here on the daily time frame, if it's a range bound market, it could do this, right? That's what range bound markets do. Any kind of trending indicator is not going to help you in a situation like this. So we're still above the 50. Fantastic. We're still above the 21. Fantastic. Here we go to the weekly time frame. You can see last week we got that big bullish move higher. We closed above 3 bullish weekly candles here. That's good. Then we had a retest weekly candle, which is good. And then we had a bullish continuation weekly candle, which is good. The problem with this bullish breakout candle or continuation candle is that it completely retraced in the last 4 days or 5 days of this week's trade. But we did get a little bit of news that wasn't the greatest, right? As far as the jobs number goes, only 12,000 new jobs. Not really what the market wanted to see, but there was hurricanes and other things. And I'm pretty sure that number will be different later on. I'm sure it will be revised. But on the weekly, you retested the 60 to the upside and you had your pullback. Depending on where this thing closes this week will determine whether or not we get above it or not. If we do not get above this, if next week we open and close much lower, that will put the RSI closer to the 50, if not back down under the 50, depending on how big the move is. In that scenario, obviously, I would be looking for shorts because you're losing bullish momentum on your RSI. This is a momentum oscillator. That is what you need to use it for, not to determine whether or not you want to take a sell on an overbought market or a buy on an oversold market. And right now, it is good. And another thing that I like about where it is currently positioned, if it does start to get more bullish and start breaking out weekly candles, you have a long way to go before you start to get into that massively overbought region that could definitely push price so high. But we'll see. This is a bullish signal here. All right. It is a bullish RSI, not a bearish one. So that's Bitcoin's analysis in the whole. Let's go look at the S&P 500. I will give you your expected weekly move. Next week, you have 151 point expected move. That is a big one. In fact, it's probably the biggest one we've seen in a long time. I mean, I've been plotting this expected move every single week for a long time here, and you can see the green line to the red line here. That's a wide one, very wide. It's wider than anything we've seen in a long time. 151 points, that's big. That's based on the election. That's based on the Fed. All right. So the expected move high, 58.79. Expected move low, 55.77. That is on the SPX. Your close on Friday, 57.28. So we did pull back a little bit, but this is nowhere near looking like a bearish market, not even close. That's it on the S&Ps. Obviously, we're going to trade the S&Ps. I did sell a put when we got down here to the bottom edge of the expected move, and I did close that trade out Friday for a profit. I love it when we get down here to the bottom edge of the expected move, especially in a bullish market, because it gives me the opportunity to sell puts, and I love selling puts in a bull market. That's just a good way to make a little bit of money without getting outright just super bullish. All right, let me go over here and show you this real quick. So this is the sources from Dean Christian's Sentiment Trader. I got this from Chivaco Capital. He's the one that brought it up and put it on this nice little display here for us, but you can read what it says. Momentum in the world's most risky asset shifted to a bull regime. The key points: the RSI for Bitcoin shifted to a favorable position, triggering a buy signal for the cryptocurrency. When the RSI maintains a bull regime status, the cryptocurrency produces an annualized return of 100%. Only on the median percent returns, you can see that 1 week later, the potential for the S&Ps to be bearish after the bullish signal is still there. This is not showing you what the market's going to do in the next week or two. It's basically saying, hey, every time in history when this has happened, this is what has happened in all the other markets. So basically, every time Bitcoin's done this, this is what has happened all the way out to a year later. So whether you're looking out 2 months or a quarter, 6 months to a year later, in every scenario, you have been up on the S&P 500. So that's good news. Bullish, really bullish, not bearish. And now let's go here to the 10-year, because this is something else. Once again, same guy, but everybody's been, talking about that 10-year treasury yield. We're going back up to 6 this time. The markets are going to roll over and die. The 10-year treasury yield has risen more than 65 basis points in over 30 days. Similar surges with the Fed easing policy suggest the 10-year yield could decline in the near term, not ascend, decline. Stocks managed to rally in the face of rising rates, achieving a 100% win rate in the following year. Huge. So even though we did get this big move up on the 10-year, in a year from now, in every scenario, the market has been very bullish moving on. And here you go for your weeks. Here's all the dates that this chart did. You can pause this screen if you want this chart to look at it for yourself and to digest it. But I mean, it's fantastic. Now, there were times that you weren't bullish in 1 week out after the 10-year moved up 65 basis points. There was even a time when you weren't bullish 2 weeks later after you had a 65 basis point move in the 10-year to the upside. But in every scenario, you were always higher 12 months later on the markets. I'm going to pull up the XLK versus the XLE. This is the technology sector versus the energy sector. This is an inflationary indicator. All right. So whenever there is inflation, you can see what happens to this chart. You dump. Whenever investors are afraid of inflation, we know that inflation went up in 2022. That's when we had a bear market across the board in most asset classes, right? So there we have it. Boom. Whenever there's inflationary fears out there, this thing comes off, and it comes off hard. Now, these aren't like the best looking daily candles in the world, but you can clearly see once this thing topped out how fast it started to go down. This is all December, October, November, December. You're moving higher, higher, higher. Then January, the very first month of the year 2022, when inflation was already starting to skyrocket, this thing just rolled over and kept going, kept going, kept going. If you pull up your indicators, you can look at your moving averages and stuff. You lost the 200s here, and you never even came back and retested them. I mean, literally, if you scrunch it up, you can see beautifully how this works. And if you come over to where you are now, does this look like what we just looked at? No, it don't. I mean, we're pulling back a little bit, but we're not flat dumping for the last 3 weeks. So this would be indicative of investors not being concerned at all for inflation, even though the gold chart is moving higher, right? Gold has been making fresh all-time highs. If you don't know, it's just, it's been bullish, but the S&Ps have been making fresh all-time highs. If you didn't know, the Dow Jones has been making fresh all-time highs. If you didn't know, the only one that hasn't made a fresh all-time high yet is the heavy weighted tech sector in the NDX or the NASDAQ. That's the only one that hasn't. And as soon as the tech sector catches up, the markets are going to go to the moon, more than likely. So this doesn't say or suggest anything is going to happen. Basically, we can't see into the future, but we can look at these charts and distinguish whether or not charts are starting to position themselves or start to look like investors are positioning themselves for an inflationary environment. Gold is a very good determination of a risk-on environment. All right, so that's your inflationary. Let's go look at the defensive stance for like potentially recessionary. All right, so this would be your S&P versus consumer staples. So over here, I have marked out for you, this is a recessionary fear chart. So if we go back over to where we had recessionary fears, you dumped. This is all the way back in March of 2020. I mean, massive dumps going on here. This is kind of like where we are now, right? This one little move lower. But, I mean, this thing went. And it wasn't until the Fed stepped up and put that Fed put in the marketplace that the market decided to rally. And then here was what it looks like if in an inflationary environment, you roll over, you make standard lower lows and lower highs. You took out this low, then you took out that low, then you took out that low. There's 1, 2, 3, 4 lows consistently getting beaten by a lower low. Same goes for the highs. You're making lower highs. That's how you determine whether or not a market is potentially reversing or not. Right now, there's just not enough data to suggest that. Here we are today. So we had this unwind carry trade here. That did put a fear under the marketplace. That did cause a super massive VIX to jump up all the way to $65. I mean, everybody thought the markets were going to continue lower because they thought it was just going to unwind everything. And what happened? You put in a higher low and then you're back up near the highs. So does this look like the market is structured for a defensive stance or a recession? No, it doesn't. If you pull up your moving averages, once again, you're going to see they are all structured bullish beautifully. Now, it's not to say that it won't look like this next week. Next Saturday, we could be all the way down here. And if that's the case, we're going to let you know. All right, we're going to be just fine. We're going to be all right. And then finally, let's go look at XLY versus XLP. This goes to growth. And as you know, tech is a growth sector. Let's go back over here. Once again, we'll pull up the same thing. Back when we had the bear market of 2022. I mean, once you started taking out these lows, then you started making lower highs. Then your moving averages got all structured differently. You came back up, you retested the 200, and then immediately you fell away. That was for 1 day. 1 day. That is a rejection. That is what we call a resistance test in the markets. And that is a good spot to look for shorts, especially since you made lower low there and a lower low, right? So any pullbacks in price when you're making fresh lower highs and lower lows, you look for shorts, and that would have been fantastic. Do we have that where we are currently? No. In fact, the market is starting to get itself structured. Once again, back to the upside. Here's your yearly opening range of this thing. You make a fresh yearly high on Friday. That's not bearish. That's bullish. And then ultimately, let's go look at Tesla real quick. Basically, this yellow line is the 2024 yearly open. Anytime you see a yellow line on my chart is a yearly open. Generally, you can tell what year it is just by looking over here to the right. There's a 21 there. That means this yellow line down here is the 2021 yearly opening. This is your 2024 yearly opening. Tesla is pulling back. We were watching for a pullback. Once we broke out up here, I told everybody, do not be a buyer on this until at least you get back down to here. And then I want to see support build in here for a few days, at least, before you start to look to get bullish again. And with the election coming up so quick, like on Tuesday night, there's going to be a lot of volatility in the marketplace. You might get big swings higher on Monday, and by Wednesday morning, you might wake up and have a 20%, 30% dump on some of these things. So if you're going to trade this week, you need to make sure that you understand holding over during closed market hours is going to be detrimental to you if you're trading options, or potentially, because you can have massive, massive swings this week, both bullish and bearish. All right. And these levels do not work that great when the market is very volatile. They only work, or they work better, I should say, when the market has a normal VIX. It's not elevated. Right now we have an elevated VIX. In fact, we are more elevated this week than we were last week. Last week we were at $20 when we closed. This week we're at $21 when we closed. That is an elevated VIX. That is heightened volatility. The measured move alone shows you that there's going to be a big range this week. Tesla, I'm still waiting. 250.08. I need to start seeing daily closures back above this price. Only then and after the election can I start to look back for bullish entries on Tesla. We did make a fresh yearly high up here. So I do have more of a bullish bias than a bearish one, because I like to trade in the direction of the trend. Unfortunately, Tesla is not trending. It's in a range. Now, as far as the DXY, talking about the DXY strength and everything we saw, we got the jobs number out Friday, and the dollar looks strong still. All right. But here's the thing. If the 10-year is going to roll over, then we're probably going to be looking for the dollar to roll back over as well. Generally, when you're cutting interest rates, that's bearish for the dollar on a macro stance. Unfortunately, this doesn't look like a short covering rally, so something might have changed here, but there is a trade set up here. It's USDCAD, and the reason I'm looking at the CAD is simple. We just liquidated Q3 2024's high on Friday. This is perfect. This is generally what we want to see if we're going to see a reversal. We want to see the liquidity get liquidated. It's not always going to happen. So I did take a short trade on this last week. I did get stopped out of it. It is very difficult to time the markets. I'm not saying that it's easy, but you can watch this, and if you get back under this white line, then you can use the high made on Friday to basically put your risk up above that. So you could take a short upon getting back under 139.53 and throw your stop above Friday's high. Is that going to be a pretty wide stop? Yeah, it will be, but USDCAD doesn't move very quickly. It's not like pound, and it's not like the USDJPY right now making big moves intraday. Now, the reason I'm looking for this is, one, potential dollar weakness, but the main factor is CAD strength. And the reason I'm looking for CAD strength is simply because the futures show massive bullish positions being taken by the dealers. Now, if you look at this chart, basically they start to get long as price starts to find the bottom down here. This is that positioning. As the red line goes up, your dealers and commercials, swap dealers, commercials are starting to get long, and price reversed here. So here's another point where they started to get long. Obviously, the COT data does not work very fast. It's not a good day trading indicator, but it is a good indicator to show you that there is a potential bottom coming in here on the CAD. Now, if you're not familiar with Forex, the reason we're not getting long USD CAD is because it's a pair. You're basically trading the Forex spot market from the USD and the Canadian dollar futures price. So basically what that means is if the swap dealers are getting long Canadian dollar futures, we want to short USD CAD, and that puts us in the same positioning as these people. All right. So yeah, I am looking for that to be a liquidity run. On the futures, there is another low down there at 71589, and you could potentially run below that low as well before you start to see this bullish positioning start to play out. But I mean, the red on both sides of this indicator are showing that they are building in a long position, and a pretty big one now. I mean, you're up there. I can go back in time here and show you that back here when this low was put in all the way back in 2020, this is March of 2020 when the pandemic happened, you can see them starting to get bullishly positioned here, and then finally a low was put in, and then slowly over time it did migrate higher. And that's only getting long, 34,000 contracts? They're already long 174,000. So this is big positioning. This isn't small positioning. Now, on the other side of their trade are asset managers and institutions. They are shorting it. So which one's going to be right? We don't know, as they are both positioned opposite. But it does look to me like generally the swap dealers and the dealer intermediaries are the ones that are generally on the right side of the market. You can just pull this up. This is on barchart.com. I don't get paid to say that. It's just an indicator. You can go look for yourself. I mean, the red line is generally positioned for the right way over time. So they're obviously positioned. You can see each week they have made a bigger position up, up, and up. Eventually there is going to be low here more than likely, and the markets are going to trend higher for a few weeks. It will be difficult, like I said, to time that trade, but they are already positioned pretty big. So at any point, this thing could start rolling over now, from as far as I'm concerned. Now, if you keep making higher daily closes, then wait. You can wait. We go into the 4 hour. You can see this is why I took the position early. I thought maybe we were just going to get up there real close and then roll over. And then I got stopped out on Friday thanks to the jobs report. So it is what it is. All right. But I am looking to short USDCAD again. Make sure you guys have a fantastic rest of your day. Make sure you trade safe, trade smart. And as always, happy trading, everybody.